$5 million from the Turks and Caicos National Insurance Board domestic fund has been invested in electricity monopoly provider FortisTCI. The bond, which is due by July 1st, 2031, was officially secured today with an expected annual return of 5.14%. CEO of the National Insurance Board, Walter Gardner, described the agreement as historic.
I'm happy to be here this morning to participate in such an historic occasion in the life of the NIB, which will hopefully serve as an impetus, the stimulus for further future investments in the local economy funded by your National Insurance Board with your national insurance contributions. I am particularly happy that this particular decision by the NIB is being made public for the benefit of the public in such a transparent manner as it should be and will continue to be. For I always say, it's your money, you have the right to know.
Discussions between the two companies gained traction in February of this year when both entities met for some serious discussion after years of the idea lingering on the table.
These funds will be used to partially finance the company's capital expenditure through 2016 to 2018. These infrastructure investments are for the benefit of the Turks and Caicos Islands. I'm not being hyperbolic when I say that this is truly an historic occasion. It marks for the first time that the people of the Turks and Caicos Islands, through the NIB, can invest in a utility company that serves them and their communities. And we are proud that FortisTCI offers a high quality, investment grade, local investment opportunity backed by our parent company, Fortis Inc., to the National Insurance Board.
The NIB Domestic Investment Fund has now been reduced to $17 million following FortisTCI's $5 million bond agreement. NIB technocrats are fishing for prudent investment opportunities in the public and private sector now. Several proposals were recently received from developers looking to finance real estate projects, but were unsuccessful. Investment manager Deandra Mills said these investments were not deemed viable and shared the domestic investment criteria. The Domestic Investment Fund has been underutilized for the past 4 years. NIB previously participated in a government bond, a TC Invest loan which have since matured, and real estate opportunities, all of which were debt investments with the largest valuing $14 million.
We limit, the lower limit for any investment proposal, debt investment, is $1 million. And for equity investments, the lower limit is $250,000. And we require a debt-to-value ratio of 60 to 40, right? Which means that we would finance up to 60% of any investment. There are other such criteria regarding cash flow and regarding the financials and what have you, but they are detailed inside of our domestic investment policy, which is found online. We're constantly getting in excess contributions which add to the fund, and these excess contributions artificially grow the fund, as well as investment returns would grow the fund. So we invest in a variety of asset classes and investment styles in various geographies. We're in the developed markets and emerging markets, where the different return characteristics and also different risk profiles, but they also, each of them provide return opportunities for the fund to grow it even further.
Some of the applications that we've had and I may have overstated when I said a lot, but we have had a few. But some of those that we've had, the debt to equity ratio weren't consistent with our expectation. With a few of them, the cash flow projections didn't necessarily give us comfort that that we would be able to get a return on or return of investment. and for the most part, really, it came down to the financials with all of the investment options. So we have to do our due diligence and to evaluate all of the investment opportunities on its merit. And all of those that we have passed on have been purely based on the financial merits of the investment.
90% of the National Insurance Board investment portfolio consists of international companies. Deputy Chair of the Investment Committee, Floyd Seymour, spoke about their preference to invest in more international companies.
We've got investments all around the world. You name any of the large companies in the world, the NIB is invested in them, from Facebook to Google to whoever you want to think of. The NIB is invested globally. So the majority of our investments are currently outside, but we want to also focus on having that domestic portfolio fully invested. And there's a difference between investing in ExxonMobil and investing in Seymour's gas station or whatever. I think the contributors would prefer to see their money invested in an ExxonMobil than a Seymour's gas station.
So 90% of your investment portfolio is international. What is the total value of the international investments today, overall?
Well, the total value of the international portfolio would be about 200 million.
That
Yes.
$200 million figure represents the dollar value of the investments made in the United States and other international markets over the past 16 years by the NIB. Instead of your NIB contributions simply sitting in a bank account, technocrats invest a portion of the fund to regenerate revenue. Nikira John, 4 News.